Section 7.3, buying and selling a home. So we talked about renting, the positive and negative on renting, and now we're going to go into those of home ownership, but also how to buy and how to sell a home. So advantages of ownership. First one being stability. It's permanent, and you have a permanent residence. There are no restrictions. You can express yourself how you want. You can decorate your place how you want. As we said, with apartments, you can't just rip the carpet up and put down wood floors. Your lifestyle, whatever lifestyle you have, you can have it with home ownership. If you love pets, you have nothing restricting you from having pets. There are financial benefits. You do receive some tax benefits. You can deduct interest charges on loan payments from federal income taxes. So the interest charges that you pay on your mortgage, you can deduct those from your federal income taxes. Your property taxes are also deductible as well. So we do receive some pretty good tax benefits, and we should record those that I just noted down in your notes. You also have equity. You have an asset, unlike apartments with housing and home ownership. You have assets, you obtain some equity, and of course, privacy. A lot better than apartments. Disadvantages. It is a financial risk. There's a large down payment, usually 20%. So imagine a $300,000, $400,000 house. 20% of that is what you need as a down payment right up front. A good number to have in the bank ready before you even look to buy a house is between $40,000 to $50,000 because that's your down payment. So a large down payment, there's high loan payments because you're paying so much for a house, and the value of your home may decline. It's not always guaranteed that you'll have the value of your house will increase. It can decline. Limited mobility, the process to sell takes a while. There's a lot of paperwork and there's high expenses, such as maintenance and repairs. If you have to fix a roof, your basement, it's a lot of high expenses if anything were to go wrong. Taking out a fireplace, cleaning your chimney, all the exterior work. So things you need to consider with home ownership. Now the types of housing. If a single family dwelling, this is what's usually in Island, Woodbridge Township. It's a freestanding house. It's separate. It has a lawn. It's not connected to any other buildings. You have some outdoor space, but that's also the most expensive. You also have your multi-unit dwellings. It could be a duplex or a townhouse where you're attached, physically attached to other units, or you may be in a single building that is divided amongst families. So you might have one family live upstairs, another family live downstairs. There are also condominiums or condos. It's a group of apartments or townhouses that people own instead of rent. And you usually, on top of your mortgage or your loan, you pay a monthly fee to cover maintenance because someone takes care of your exterior, and that all comes with what's called an association fee. So there's another fee with condominiums that you just need to watch out for. And there's also prefabricated or mobile homes. Those are mass manufactured. They're fully assembled generally at the factory. They are your cheapest types of housing. Now, the buying process for buying a home. First thing you need to do is determine your needs. Consider price, size, quality, location. You saw that with the rent or buy episode. They had their different needs and they were working those out before they even searched. Second, you need to find and evaluate property to purchase. This is going house hunting based on your desired location. So if your desired location is in Westfield, you would start house hunting in Westfield. And then third, price the property. You want to research to find out if the price is reasonable that they're charging for the house. Say you decided on one, you check the price out, you then evaluate whether the price is reasonable. You then put an offer in. You never want to put your best offer first. This is a negotiation now when you go to put an offer in. And you also have to check, do you have any other competition? Because you might have to come with a more serious first offer than lower, we should say, offer in hopes that it can get accepted. So things to consider. the offer that you put in may be accepted, or it might start a bidding war between yourself, other buyers, and or negotiations with the owner. Continued. All right, I know it says one at the top. This should be number 4. This is when you obtain financing. This is when you obtain your loan or your mortgage. You need to qualify for a mortgage. The mortgage being as if we don't remember, a loan extended to someone who buys property. And if you remember from your 5 C's, whether you are approved is based on your 5 C's: credit history, character, collateral, etc. And then you would put your down payment, which is usually 20%, as mentioned before. If it's less than 20%, you may have to purchase what's called a private mortgage insurance. It's really just an insurance to protect the lender, just in case you can't make the payments or you make them late. And then lastly, number 5, so just checking numbers in your notes, you close the transaction. At closing, which is the meeting between the seller, the buyer, and the lender to complete the transaction, you sign your documents, any last minute details you go over, you transfer the ownership, and there's also closing costs, which are fees and charges due at the time of closing, really for the legal details. You have to purchase title insurance, and that's insurance that protects the buyer if any new problems are found that you didn't find before. And then there's what's called a fee for the deed being the official document that transfers ownership. So other fees on top of the cost of the house you just need to be aware of. Paying your mortgage, very similar to student loans, but with mortgages, they're usually paid back over a 15 to 30 year period. There are monthly payments. As we noted, you can pay them off early to avoid interest. The table on the right, if you look at the bottom, the person on the right with the additional payment is only paying $100 more, but they end up saving $35,000 in interest, and you cut off 5 years of your mortgage term. So we discussed this in detail with student loans. Always try to pay more than your minimum. Types of mortgages. Wrapping up this section. There's a fixed rate mortgage, which is your conventional mortgage. You are at a fixed interest rate and a fixed schedule of payments. Right? Interest rate doesn't change. Remember, definition of fixed. There's also an adjustable rate mortgage in which the interest rate fluctuates. So your two main types of mortgages, you usually like to stay with a fixed rate mortgage. That's your conventional mortgage. But you can also go for an adjustable rate. There's also a home equity loan, and that's also what's called a second mortgage. You borrow on your equity. So you borrow on what you paid so far on your home. This is when if you need more money in case you can't pay your first mortgage. So you really won't get this unless you're having issues with your first mortgage. And you borrow back on your equity and you get a percentage off that is what you receive in a second mortgage or what's called your home equity loan. Just want you to be aware of what that is. You do hear it a lot. And there's also refinancing. And you can do this with your car loans and other different types of loans where you can hopefully refinance to reduce your monthly payments if lower interest rates are being offered. So if you're having a hard time meeting your payments, refinancing is something to definitely consider. And then when selling a home, first thing, prepare the home for selling, make repairs, paint, keep the house clean, really make it spotless for a buyer. Then you set a price. Here you get an appraisal. An appraisal is an estimate of the current value of the property. So you're not just throwing out any old number for your house. You get an official appraisal. So you're giving a serious number to buyers, and you're also not underselling yourself. You want to be reasonable, but look to make a profit. You're here to make money, okay? But you don't want to be too greedy where you discourage buyers. Thirdly, you can hire a real estate agent. Now, it does cost money. They do take a commission off of what the house sells for, but they will attract buyers. They'll show the home to different buyers. They'll offer you advice, and they'll handle most of the finances and paperwork. So something to consider. Or you can do it on your own, and of course, that's free. You're not paying yourself.